Hey guys, welcome to another video here at Financial Hub. My name is Caleb, for those who do not know me, and today I'm going to share very important information. 10 important ways that's going to help you, greatly help you improve your trading strategy, your trading analysis, and if you're able to improve all that, it will in the end improve your profitability at the end of the day. So listen carefully. If you have anywhere to write, if you're writing on the laptop, if you have a notebook, if you have a pen and paper, take out those pen and papers and be ready to write down these 10 nuggets that I wish someone told me when I was starting out my Forex journey. But anyway, I'm here to help you guys because that is what we're here for. So point one, when you're doing your analysis, be open-minded and look at all scenarios, okay? Never look at one side of the chart. To me, trading is like a coin, okay? It has two sides. If you're holding the whole coin, there's tails and there's heads. There's no one-sided only, okay? So anything can happen. So when you're doing your trading analysis, when you're starting off the week, when you're preparing for the market, look at all scenarios so that the market doesn't catch you off guard, okay? So for example, look at my screen, okay? So what I have here, let me show you an example of an analysis I had earlier on today, okay? So this is USD CAD. Now every single day, as you can see here, I normally do market analysis every single day. So every morning when I wake up, I look at a big picture. What do I expect to see out of the market? So you can see all this. I do it every single day. I normally don't have Mondays here because Mondays I tend to do the weekly analysis, not the daily one, the weekly one to prepare for the whole week. But later on in the day, as the week continues, I make sure I do a mandatory, see here, narrative of the day. The narrative I can have on Monday can be totally different than the narrative I have on Wednesday. Well, not totally different, don't get me wrong. When I'm doing my market analysis, and that's why it's good to look at all scenarios. On Monday, I'll do a general big analysis, overall analysis of the direction of the trend, both sides. I weigh both options, and I'll show you an example. Then later on in the week, I wait for the market to affirm, okay? So I have scenario A. If scenario A does this and this and this is what I expect to happen. In scenario B, if this and this happens, this is what I expect to see out of the market. So for example, if I come here, okay, let's look at an analysis I had earlier on today morning. Where is it? Here, USD CAD. You can see I was saying awaiting for market confirmation. Okay, so let's look at this picture. Look at this. So this is USD CAD. I was waiting for a sell-off yesterday. I wanted to short the market and take the market further down because the market was moving in a downtrend. So you can see this lower low, lower high, lower low, lower high. Lower low, I was expecting a lower high in the form of a flag. I was expecting to short here. But something intrigued me. During that time, you can see what happened. Market strongly closed above this level. You can see how strong that level is. Market came and touched it once, touched it twice, touched it again, rejecting, then finally strongly closing above. Now, to me, that doesn't mean immediately start selling. My entry point has been reached and all that, okay? Because if you look at what I was having on Tuesday, okay, that was on Tuesday, yesterday. So let me show you. USD CAD, so you can see here, I had a bearish tone. This was a potential flag formation. This is a major pattern that I like trading. So I was waiting for market come and reject, okay, touch that high level, remove all the stop losses that are here, come and close back below. Then I've taken my short position to short it until maybe 1.3560, okay? But what happened instead? You can see here, I'd prepared my guns. I was ready. I was totally ready. This was the 1 hour chart and this is the 4 hour chart, okay? Market started moving towards, this is 5 a.m. in the morning when I do my pre-market scan or narrative, okay, etc. Now what happened on Wednesday, early on today morning, okay, I mean yesterday, not today, yesterday market shot above. Now this was a strong close above that level that did not allow me to take a short position because you can see all these rejections, then finally market closed above. Now think of the market like this. Many people will rush to take this trade, okay? Immediately it goes up, it starts closing back below, okay? But I had a different idea. If market closes back above this level, okay, because you can see here, I had written market pushed up, we had a failed follow through, started coming back down, market pushing to close below support. But I had an idea where if market, so this is, I'm looking at all options. Yes, there's that short and I can enter that short around this level. But if market closes back above the level, then it's giving us different information. So what, if you come and look at the markets now, let's see what has just happened. Okay, now look, that same market, okay, here, you can see what happened. It was here. Markets were trying to close back below. Market rejected that level, closed as a pin bar or a hammer, depending on how you call it. And you can see market is moving higher. And I prefer, okay, shorting better at this level rather than shorting at that lower level, because this was a resistance level. Market broke that level, break of structure, market moving further up. Now over here, I see a better rejection, better risk reward ratio, and a better entry for me. So that's what I'm waiting for. You can see now it's 3. I'm waiting for New York open, and that's when I'll be looking for my entry scenarios. Okay, so step number 1, like I said, guys, to improve, because if you enter that trade very quickly, I'm sure most of you have lost money on that trade. But if you're patient enough, be able to read the market and be patient for the bigger picture to happen, then trust you me, you're going to get many successful trades. Okay, and by waiting for those successful trades, you're going to have less trades than a normal trader would have. So patience is key. Quality over quantity. Quality over quantity, and less is more. That's a rule I run with. Okay, so that's step number 1. Point number 2, and this is also an important point that I wish I knew earlier on. When I used to analyze the market a long time ago, back in 2017, 2018, I used to really focus on whether I'm right or wrong. Okay, now this point is to tell you guys, stop focusing on whether your analysis is right or wrong. The main goal of trading is 2 things: capital preservation and making money. No one ever comes to trading says, I want to be right more times than I am wrong. No, that's not trading. Okay, so focus on how can you protect the downside, protect the capital, and maximize on the upside. Okay, so whenever I'm trading or whenever I'm analyzing, I'm never really focusing on, am I right or am I wrong? I just want to be right and all that. You know, when you'll never hear me talking about like I've come here and done analysis, a couple of trades that hit entry, went straight to TP. I've never come on and said, I told you guys that was going to work, our trading strategy is the best. No. Those are lingos for the pride people. I find trading can really humble you. So I never come and say, I told you so. These days I normally wait for market to do what the market does. I never trend predict. It's like a baby. Okay, when a baby is doing baby stuff, you can never know what the baby is going to do. You don't know if they're going to hurt themselves. You don't know whether they're going to make you laugh. You never know the outcome. So the same thing with the trading. Never try and predict whether you'll be right or wrong. It's a matter of probabilities, a matter of weighing both options and having an edge to tell you which side weighs more than the other, and then putting enough risk management, because also as you have an idea of where market might go, you're not 100% sure. You have a probability. So also in trading, whenever you're putting 100%, this is what I know. Always focus on how can you protect the downside and maximize on the upside. And the only way you can do that is by being open-minded and understanding in the markets you're never really right all the time and you're never really wrong all of the time. Have a wide analysis, have a wide be open-minded, and just let the markets do what the markets do. What you do in return, just follow where the market is taking you and read the tape properly. So that's step number 2. Step number 3, you must have a trading plan. A bad plan is better than no plan. I teach this a lot in my classes. I tell my students, you better have a plan than have no plan at all. Okay, and this is the scenario I like using. Think of a trading plan like Google Maps. Okay, so Google Maps, this is how it works. You put a destination and you start following that destination. You press start and start walking or driving or wherever. You're going cycling in that direction. Okay, so the goal of the Google Map is to help you get to your destination. True? Okay, that's the same thing as a trading plan. A trading plan is to help you achieve your goal. If your goal is to achieve 10% every month, 5%, okay, never have a crazy goal like having 100% return. That's very ambitious, audacious. It is not consistent. It can happen, but it's not consistent. So on the same scenario, a plan helps you achieve a certain goal, a realistic goal, a realistic, achievable goal. Okay, now on the Google Maps, when you're going in the direction, let's say now you closed your phone and maybe you decided, let me try and figure out the way on my own. Okay, when you start getting lost and you look at your Google Map, what will it show you? It will tell you to redirect, or it will change the direction, okay, but still helping you achieve your goal. It is not telling you you're wrong, stop going in that direction. It will recalibrate and find a different direction for you to achieve your goal. Okay, so the same thing as a trading plan. It not only helps you achieve your goal, it also helps you know when you're lost. Okay, it helps you know when you're doing the wrong things at the wrong time, and helps calibrate you to go back on the road and follow that direction. So most of the time when I find myself not trading the plan, I'm doing totally different things, I look at my plan, say this is what my plan told me, I've backtested this plan, because every trading plan has to have been backtested, okay? I've backtested it and this is what it's telling me. So I'll recalibrate and redirect myself. That's why I keep saying a bad plan is better than no plan, because he who has a bad plan can recorrect himself and find the right direction. He who has no plan will forever be lost. Cool? That's step number 3. Step 4, and this is important, have at least 3 trading time frames, okay? Now, I like this because I never used to know this when I started out. I used to have a weekly analysis. So if you come here on the screen and you're looking for different time frames, so look, you have a 1 minute, 2 minute, 3 minute, 5 minute, 10, 15, 30, 45, 1, 2, 3, 4. You have 1 day, 1 week, 1 month, etc. Okay, now long term I used to have my analysis 1 month all the way to 15 minutes. I never, for some certain reason, I've never gone below the 15 minute ever. I've never done a decision making on a 5 minute, 1 minute. I find it too fast. It's not my style. Okay, but I used to do that 1 week all the way to 15 minutes. Now, trust you, my friend, there can be a lot of discrepancy between those 2 time frames. Okay, it's too big, too small. So have 3 main time frames and be consistent with those time frames. So what do I mean? Now you can see for me, if I refresh, let me show you. So you can see here I have 1 hour, this. The 15 minutes was here because I was showing something, okay? But if I refresh, let me save this. Okay, why is it focusing? Okay, my point is focus on the 3 main time frames. If you see mine, I've only started the 1 hour, 4 hour, and 1 day. So you can always come here and start them so that you can have them there. For example, let me remove the 15 minutes. So like that, day 4, 1, okay? Now, the daily, okay, let me show you. Okay, you should have 3 time frames, okay? Higher time frame, okay, we call it higher time frame, okay. HTF, I call it HTF in short. Trading time frame, okay, trading time frame, and the lower time frame, okay. Let's just put trading TF, okay. Higher time frame, trading time frame, and that. Now for me, my higher time frame is the daily, okay. Why? Because the higher time frame for me is telling me the big picture. Okay, this is the big picture. Where is the market going? What's the direction of the trend? Okay, then I come down to the 4 hour. Now for me, the 4 hour is my trading time frame, because here's where I'm looking for trading patterns. That's where I'm focusing on getting the idea, where can I get an entry? Okay, then now the 1 hour is what gives me precise entry points. Okay, precise entry points. So have those 3 time frames in the back of your mind. Now you don't necessarily have to have the daily, 4 hour and 1 hour. Maybe you're a short-term scalper, short-term trader. The 3 main time frames you should focus on. For example, if you have the 4 hours your higher time frame, then have the 1 hour as the trading time frame and the 15 minutes as the lower time frame. Now there's a rule that I normally teach in my class of how to figure out which time frame best suits your strategy. So if you enroll for our strategy this coming month of June, then I'm going to teach you that specific strategy and how you can improve that, among many other things. But my main point on that point is have 3 main time frames and be consistent. Now, me, I'm very consistent on these time frames. Sometimes, once in a while, I'll go to the 1 week when the week is starting, just to look at the big picture, the bigger picture, okay? But I don't focus too much on it. My main focus is these 3 time frames, with the biggest focus on the 4 hour and 1 hour, okay? So that's the next point. Make sure you have 3 main time frames and be consistent in those time frames. And trust you me, my friend, your trading is really going to improve. Step 5, another major thing, news, okay? Take care of news. Now, for example, I normally use Forex Factory. So if you don't know where to find your news data, for me, I used to use a lot. Long term, I used to have investing.com. I used to have trading economics. I used to have Forex Factory. And I used to look at news from everywhere. Now, that is really going to mess up your mind. You're going to have a lot of news, a lot of data on your head. Focus on one side. For me, I'll give you an example and I'll give you why. Focus on Forex Factory. So if you go to their page, forexfactory.com, go to calendar, okay? You're going to find all this news. You're seeing this. This is for this week. Now, trust you me, my friend, this is a lot of unnecessary news, okay? A lot. You can't wake up and follow all this news, what's going to happen. I hear people saying, hey guys, today is Aussie dollar, Westpac consumer sentiment. What do you guys think? Leave that alone. Some things are not important. So what do? I come in filter, okay? So filter here. There's a filter here on the top right. Now, for me, what I normally come and remove, okay, is this orange one. You can see the orange one writes medium impact expected, okay? So I remove that. And the yellow one is normally low impact expected. I remove that. Now I leave the red one, which is high impact. Now this high impact news data is highly going to affect the pairs that we trade, okay? And the gray one, I leave it because it's non-economic. It gives us holidays, for example. I'll show you. So you come, remove those two, apply filter, okay? Now you can see how it's removed all those news, those noises, okay? And this is what I'm left with. Now this is what I'll pay attention. Now something else that guides me when I'm paying attention to that, I don't pay attention to everything. Now look at my trading pairs. I only trade USD CAD, Aussie dollar, and gold. Meaning I'm only trading 3 economies. I'm trading USD, which is a dollar from the United States, Canada, Canadian dollar, and Australian dollar. Okay, so those are the 3 economies. So when I'm looking at my news, that is what I'm focusing on. Canada, okay, like yesterday we had major news that came out, okay? I look at, I don't look at pound, okay? I'll have them at the back of my mind. Like today, the CPI that came out at 9 a.m. from the pound, let me show you what happened, because it pushed market up and then market has started falling. If you look at it on the 1 hour chart, so look at this. So when that CPI came out, look at that strong move, okay? If you had shorts here, stop losses taken out, then markets went down. So you have to pay attention to the market you're paying attention to, okay? Especially if you trade it. I don't trade the pound, so it doesn't affect me. I don't trade New Zealand dollar, so I'll see it, but I won't pay too much attention. I just have them so that I can see the global news, what is happening around the world. Euro, you can see tomorrow we have a lot of data from Euro GBP. Don't affect me at all. The only thing that is going to affect me is the USD, okay? And after that, I'm clear to go. So I only focus on those news, high impact news that can affect my market. And you can see I've really filtered it out even more because I trade very few pairs. So that's why I keep telling you, less is more. Have few. Don't look at everything. You're going to be confused. Focus on little intensity over extensity. Don't be everywhere at the same time. Focus on few and focus on that. So know how to read the news, know what to prepare for. I have another rule. Normally before news, I don't trade, okay? Depending on the impact of the news. Things like NFP, interest rates. If I have no trade, I won't take a trade until the trade comes after and settles. If I have a trade running, then what I'll do, I'll make sure I've broken even just in case. I never try and fight the news. The news can act as a catalyst to your target or a catalyst to your stop loss. So for me, I normally tend to break even. Okay, so that's that step. So guys, that was step number 5, and this is the first part of a 2-part video where I'm going to share with you things you need to do in order to improve your trading strategy. So I hope you've enjoyed part 1, and I'm looking forward to see you guys in part 2. So be sure to wait for that video because it will be dropping soon later on this week. Okay, so other than that, I hope you've enjoyed, and like I always say, remember, stay woke, stay financially literate. May the peeps be with you.